including through this recession, have not cut them because they believe in the catastrophic benefits that they're providing, particularly healthcare and life and disability. And I don't know how I'm going to tell them that arbitrarily, because that's the way it appears, their costs are going to go up. So I guess I frankly say that I haven't done much homework on this because I've been sort of waiting for decisions. I did some preliminary, but how do I explain that to them, that all of a sudden they're going to go have to, like, it was a big move to arbitrarily add 8% to their costs in PST, which only happens in Ontario and Quebec, and now we're going to add some more.
Well, actually, the fact is, Cindy, that there is no change when it comes to insurance premium tax. That's not changing at all. And if anybody's told you it's going to 13, they're wrong. In Ontario, the current tax structure when it comes to insurance is staying the same. So it's not going. It is the great exception, actually, to the rule, where we're harmonizing almost everything except that. We've talked to the insurance, the other side of the fence on the general side. And again, so that is staying the same. They've said to me, well, how come we can't change that? And I go, well, we're eating a pretty big elephant. We're doing the biggest tax reform in 40 years. But that is staying the same. So there's no additional
like
tax.
Group insurance. You mean group insurance. I don't mean individual. I mean group.
Yeah, that's right. So
like
all of that
benefits.
stuff on the tax side stays the same. There's no change when it comes to the taxation of insurance products.
Okay.
So, but you may have heard, because you hear this, that we're eliminating the PST and we're going to the GST or to the HST, right? Mm-hmm. People say, oh, well, that means it goes to 13. The great exception to that is insurance. That stays. And for many, I think 8%, if I remember correctly. And I didn't bring one of my crack staff people here with me today from the ministry, but that's not changing.
Thank you very much.
Yeah, and I know that the providers are happy that we're eliminating the capital tax. For financial services, it is literally hundreds and hundreds of millions of dollars a year. Taxes that companies pay based on their assets, not based on how much money they're making. I'm for taxes, but if we have to have taxes, it's got to be out of profit. We have this capital tax we're eliminating on July the 1st is a tax that we have on companies based on their assets with no regard that they're making or losing money. That's why we're eliminating it. It is a very inefficient tax. And last question? Hi.
Hi. Jack DiNardo, Fundex Investments. It's my perception, which may be wrong, that the HST is being applied to MERs on mutual funds and seg funds, and we are now creating in this country an arbitrage between other products, such as ETFs and securities, which are not taxed. The taxation of those products is widening the gap of cost and overhead to such a degree that it may just make sense to move away from both seg funds and mutual funds under the IROC or the securities industry. We are looking at potentially killing an entire industry. Secondarily, again, I may be misperceiving things, you are now taxing people in Alberta who have a company that's Ontario-based on their mutual funds because they happen to buy an AGF or a CI fund based in Ontario. And I wonder what's going to happen when these companies decide to move to Boston, and you're going to kill another industry at the same time. So can you speak to that?
Great question. And well, there's a couple of things. One, let's just remember that if there's an additional tax, whoever has to charge that, their cost of business is going down. So the free market economy, which we all believe in, tells us that whoever provides the best value for the money gets market share. Whoever doesn't look at the best interest of their customer is going to lose market share. The question that you have, though, is the overall question of the taxation. And what I've told people is when you have the federal government of one stripe and the provincial government of a different stripe coming together and both saying that the single most important thing we can do as governments is to reform our tax system to give our business sector a competitive advantage, there's something to that. I mean, either we both lost our mind at the same time, or this is a really important thing to do. And I think as you read more and more people who become more and more informed of the nature of our tax reform, they're increasingly agreeing that this is the smart thing to do. So the question is not if we do it, the question is how we do it, right? I was just having a good chat with Paul Mann here. That is what we have to talk about, because this is opening up issues of implementation that need to be addressed. I can tell you that in Canada, what the mutual fund industry has told me, and I've talked to many of the CEOs, the problem you got here, John, is you don't have everybody on the same system. On July the 1st, there will be only 3 provinces that are not part of one national single value-added tax. They will be Prince Edward Island, right? Saskatchewan, and Manitoba. Prince Edward Island, Saskatchewan, and Manitoba, the marginal effective tax rate on new investment, right? What do you have to set aside for taxes, will be double that of any other province. Double. I'm telling you, it won't take too long for even those provinces to understand that they can't have a double taxation rate than the other provinces in this country and expect to attract investment. So I think we are getting to the point where we will have one national tax. That looks after the issue inside our confederation about where people live, right? But what we're prepared to do, and we've always said, is we're prepared to sit down with industries that are affected by this, take a look at that, and figure out what we can do about it. What modern economies do around the world is they don't throw out the better tax system, the taxation of consumption over the taxation of creation. But what they do is they use the income tax system in other modern jurisdictions, right, to make sure that you get the kind of public policy outcome that you want. And I'll just give you the example. A lot of talk about how this may force the underground economy. The federal government right now has the renovation tax credit. Hands up how many people are over the 10 grand. I told my wife to stop at 10 grand, right? She kept on going. I can hardly wait till February 1st to come. But the one thing about that, see, some people know that. The one thing about that is that renovation tax credit says, if you want the credit, you got to have a receipt. To have a receipt, it means that transaction has to be above ground. Because if the guy is cheating and he's handing out receipts, he's stupid, right? Under the GST system, it's a supply chain tax. You need everybody in the supply chain to be part of it because that's how you get your input tax credits. The guy that doesn't want to be part of the system buggers it up for everybody else. That's the nature of a value-added tax. But that's a good example about how you can overcome the unintended consequence of favoring the underground economy by using the income tax system on it's the same government, where the government uses the income tax system, right, to ensure that there's incentive to make it above ground. And I would assume that though the federal government is giving away 15 points on the deal by doing the innovation tax or the renovation tax credit, because there's receipts, they're getting income tax, they're getting CPP, and they're getting UI or EI, right? And what do we get? At the provincial, we get income tax, we get WSIB, we get employer health tax, right? I would bet that it's more than 15 points lost. And so that's what, if you go to Europe and you go to all the other countries that have gone to a broad-based consumption tax, they use the Income Tax Act. Those are the kind of discussions that we need to have because that's the new modern world that we're going to. We're the second last country in the modern world to go to this, right? We're not carving any new ground here, friends. We're just catching up to the 21st century so we can compete and get those 600,000 more people working in the province of Ontario. But that is how we actually solve that problem. But we need to have those discussions because this system is coming. And it's important for us, and it's important for groups, particularly this one, to look at those issues and give us advice. And Terry, back to you.